Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrading.com. And if you've been with us for a while, you know what we do here. And that is that we look at companies that are declaring earnings and we look at how to profit from those companies that are declaring earnings each and every week right here. This is Monday, September 22nd, 2025. And though this is not a big week for earnings as it is during peak earnings season, this week does include some high cap names that could be some market movers, and the outcomes could tilt investor sentiment. So sit back, relax. We are going to get into our list that we cover each and every week right now. All righty, welcome back to Earnings Call, and we are looking at a list of stocks that we have selected to highlight for this week. Now, keep in mind here that this week there's only 37 companies that are declaring earnings, and of that, I am only watching 16 of them, and of that, I included really the 10 best opportunities here for you. Okay, so on the left-hand side of the ledger here, we have our breakout stocks. These are stocks that are going to move double digits or are anticipated to move double digits through their earnings. That's 10% or more after they announce earnings results. And on the right-hand side of the sheet, we have what we call quiet stocks. These are stocks that only move single digits. And this is not only taken on an average move after earnings, but also what the option market makers are pricing in for the move for this particular earnings cycle. All right. So let's begin on the right-hand side of the ledger. Let's talk about these quiet stocks. Okay. Now, we do this through a publication called Delta Neutral Income. And this is where we provide opportunities to our subscribers about how to profit from these quiet stocks. All right. And you can see here that we just have a handful. So H.B. Fuller, Cintas, KB Home, and Costco really are the top candidates for quiet moves this week. So let's go through these. If we jump over to the chart, let's begin with Cintas. All right. This is still a $200 stock. Okay. Many people might not be familiar with this, but Cintas is in really the blue collar field of business. All right. They will declare on Wednesday, September 24th before market open. So first thing Wednesday morning. And the average move here for Cintas is 7%. Now, what do we do with that information? Well, we usually, one thing is consistent with all of these stocks, whether they're breakout or whether they are quiet stocks. All right. And and that is implied volatility will rise going into that earnings announcement. So what we like to do is sell implied volatility. All right. That's by selling options. And we do that through a strategy called an Iron Condor. This would be ideal for something that's priced in the $200 range. Okay. Because you can usually go far away enough from the money to profit. So Cintas will declare on Wednesday, as I mentioned, before market open, and the average move there is 7%. All right, so not a big mover, but being a $200 stock, it does offer some pretty good opportunity. Then we get to H.B. Fuller here. This stock is priced in the low 60s. They will declare on Wednesday, September 24th, and this will be after market close. So after the close of market on Wednesday, the average move here is 6%. Now, with stocks really above $50, there still is that opportunity to sell premium through a strategy like an Iron Condor. All right, but it does become a little bit more difficult, not impossible. All right, so especially for a stock that is going to move, mid single digits, it's definitely doable for that. Now, you can see here that this last earnings announcement, that's a 10% move right there. So it did move more than what the option market makers were pricing in. That is one of the things you got to be concerned about when selling premium into earnings. But as you saw here, if you saw last week's show, we had a very successful trade the prior week all right, on Kroger by selling an Iron Condor. And that worked out just great because it just really didn't move. And that's what we want from these types of trades. Okay. So next coming up will be KBH. That is KB Home. The home builder, they will also declare on Wednesday, September 24th. That is after market close. And the average move here is about 7%. So again, another stock that's in the low 60s, and 7% move is kind of getting up there a little bit. And given what home builders are having to do, I don't know if you saw the headline today from Lennar, or maybe it was over the weekend, that they are going to be cutting back on production on building homes, slowing that process down and slowing down on the incentives that they give to sell those new homes. Okay, they say that strategy has pretty much worn itself out, and they are needing to change their strategy. So it'll be interesting to see what KB Home reports coming up on Wednesday and how they move. So I would definitely, this is one I would probably watch because volatility might come into play here. But you can see the last earnings announcement back here in June. You can see, it just looks like a regular candle there. This thing moved, just a couple of dollars higher, not much at all, and was a quiet stock. But you can see volatility has picked up here a little bit. And while we're not really concerned with overall stock movement because we are in these trades for a very short period of time, we are concerned with that earnings announcement and the move that can come with that. So I would watch KB Home and just get a general feel for what's going on there. We close out the week here on the quiet stock side with Costco. Now, believe it or not, look at this. Costco is, it was $1,000 stock. Now it's in the mid 900s. And there are a lot of opportunities here to sell premium, but the option market makers are, pretty smart guys and gals, and they know how to price for these moves. Costco will declare on Thursday, September 25th, after market close. The average move here is about 4%. And, that's interesting given that the historic move, the last move actually was back here in June. Let me just throw a line on there. Okay. I believe it was right around there, around May 25th. I believe that was the earnings announcement for Costco. And, you can see that it picked up on some volatility here in March. You can see that it had a nice little drop. That was a good trade, though. We did have a winner there on Costco back in March. But, these are the moves that we try to prepare for. But Costco could be affected by many things, including inflation and the cost of goods and membership. Okay. How is their membership? And so it's really about the outlook. The earnings are one thing, but it's about the outlook that the CEOs give that really can either mute an earnings result or just blow it out of the water and the stock really moves. But Costco is one that is usually pretty quiet, only moving about 4% through earnings, ideal for an Iron Condor going through earnings. So believe it or not, that's our quiet list for this week. And if you like what we do here by talking about these stocks and about their moves that are being estimated by the market makers, please like and subscribe to us. We do this each and every Monday right here on the channel, and we actually will give out a trade alert here on the show at the end of this video, and we talk about them each and every week, about the results, how they did, and also give you a new opportunity. So before that, let's jump into our breakout stocks. And let me show you an example. Let's start off with an example. This is Akamai. Okay, they do not have earnings this week. This is just an example. This stock will have earnings in November. That's their next earnings announcement coming up is in November. But you can see I have the earnings highlighted here, the results, and this stock is a historic mover. Okay, this is one of our favorites for these breakout stocks. The strategies that we use here are straddles and strangles. Yes, we do buy straddles and strangles that have high implied volatility because they're going into earnings, because these stocks will tend to break out and move even bigger than what the option market makers are pricing in for their estimated move. Okay. And we do that through a publication called Delta Neutral Breakout, which our subscribers get to essentially benefit from me giving out that trade alert and managing it through its opening and through its closure. So let's take a look at our list. Here's our breakout list for this week. We have MillerKnoll, not really a familiar name, but Micron does have earnings this week. And interestingly enough, we have two Worthingtons. Okay, we have Worthington Industries and Worthington Steel, both declaring earnings this week, as well as one of our favorites, which is CarMax, Jabil, and Concentrix. So let's get to our list right now. Let's start with MillerKnoll. Now, even though this is only a $20 stock, I like this stock for a couple of reasons. Because it has an average move of double digits, not mid double digits, but 14%. Usually we see averages between 10 and 20%, sometimes a little bit more. So that's where that comment of mid teens kind of comes in. But here we have a stock that's going to declare its earnings results on Tuesday, September 23rd. That'll be after market close. The average move here is about 14%. Now, keep in mind with these stocks that option market makers usually price in that move. So you might price it out. And again, we use straddles or strangles. You price out a straddle and all of a sudden you realize, oh my gosh, to make any money on this, the stock's got to move 18%. And when the average or the market makers are pricing in two different numbers between the average and what they're pricing in, that's when it causes some problems. All right. But this stock does move. And we will look and see how it does on Tuesday after market close. Now let's get on to Micron, because this stock has really had a nice rally here, going from about 110 to 160, mid 160s in a heartbeat. Really, this month, this stock has just caught a bid and off it goes. This is a classic stock that could have a big reaction around what the CEO says. Not so much the earnings results, what can often do produce some big moves, but it's really in the comments that the CEOs make during the earnings call. So that will be an important one. They will declare on tomorrow, on Tuesday, September 23rd, after market close. The average move here is about 13%. Okay, so watch Micron. This could be a market mover. It did not move much last earnings, but man, after a big run like this, you could expect some volatility around earnings coming up tomorrow. Then we get into our two Worthingtons. So first, Worthington Enterprises. They will declare on Tuesday, September 23rd, after market close. The average move here is 19%. Okay, this stock really does move. You can see the last earnings announcement, although it didn't have a big percentage return for the day, you can see that it had great volatility, popping from what was the closer, $60 to $70. So a $10 move. Then it sold off throughout the day as profit taking came in, and this stock ended up closing at $61. So in the end, it only moved $1.35 from day to day, but you can see in the morning, man, it opened up over $10 higher. That's how you can make some money in these with a straddle or strangle, is on a move like that. And then we go back to the previous earnings announcement. You can see the close here before earnings was 41.63, and the results afterwards close was 51.52. Another $10 move. A $10 move on a $40 stock. That's a big move. All right. So we're expecting a move like that again. About 20% is being priced in right now. And again, they will have earnings after market close tomorrow on Tuesday. And that's Worthington Industries. Now let's talk about Worthington Steel for a moment. Okay. This is a pretty inexpensive stock, around $33. They will have their earnings on Wednesday, September 24th. After market close. The average move here is about 16%. All right. And you can see the last earnings announcement here. We had a close of 26.26 the day before earnings, and the day after earnings, it was at 31.64. All right. So a big, a nice little pop there. for the stock, and it does show a little bit of volatility around earnings. Here's one that did not work out necessarily for a straddle or strangle. As you know, this is kind of the worst thing that can happen. It gaps higher, but then reverses, or it actually gapped lower on the open, okay, and then rallied, okay, just as bad, all right. But it's that lack of follow through that really causes problems. And then here's the previous earnings result. I don't have it marked here. Let me just throw that in right there, and you can see a nice little drop in the stock. All right, so that's what we're kind of looking for going into this earnings announcement. Once again, Worthington Steel, okay, $33 stock right now. They will declare Wednesday, September 24th, after market close, and the average move here is about 16%. Okay. Now over to one of our historically favorite stocks to trade. Now CarMax, used to be pretty volatile. Okay, this stock is still on the volatile scale, but its average move has really declined over the past year. Okay, prior to that, it was a pretty volatile stock coming out of COVID and around there, but then the business model kind of settled down, and the business cycle settled down. And right now, you can get about a 10% move. That's what you can expect from CarMax. They will declare on Thursday, September 25th. That will be before market open. So they declare in the morning on Thursday morning before the market opens. And again, we're just looking for that double-digit move of about 10%. So if you were to do a straddle or strangle on this, you would need your break evens to be above, less than 10% and below less than 10%. And that's where you run into problems sometimes, because the market makers are pricing in that move and they may have it priced perfectly. That's the challenge. Okay. And so this cycle, I would just watch CarMax. Again, it really depends on not probably so much the earnings announcement itself, but what the CEO says during their earnings call that could move this stock. All right, so that'll be one to watch. Okay, and then Jabil, all right, they will have earnings announcement also on Thursday, September 25th, before market opens. Okay, along with CarMax there. The average move here, though, is about 12%. Now, this is a $200 stock. The problem with these are anytime you have a high volatile stock like Micron at 163, okay, here you have Jabil at 233. These are going to be expensive trades. So only accounts that have higher dollar average accounts, and we're talking usually anywhere from $50,000 to $75,000 size accounts or greater, could probably do a trade right like this. I didn't price it out, but I can imagine that straddle or strangle on Jabil would be about $2,000. Okay, it might be mid 2000s, like $2,400, $2,500, and that's where you really got to be careful. Smaller accounts, say if you got a $15,000 account or a $10,000 trading account, this is definitely one to watch. I would avoid actually putting a trade on it unless you have a bigger account that can where the debit totals less than 5% of your portfolio. Keep that risk under 5% of your portfolio on any single trade, and that is the way you stay in the game in case you get into a bit of a losing streak. Okay, we're going to close out the week by talking about Concentrix. All right. This stock, man, you could just see how volatile these things can get. From sometimes the stock literally went from the low 50s up to the mid 60s literally in about 2 weeks, and then from the low 60s all the way down to the mid 40s. Okay, this stock would be definitely something to watch when it declares earnings. I mean, who knows how much this thing can move. Right now, we see the average move is about 14% for Concentrix. All right. Now, they will declare on Thursday after market close. That's September 25th, Thursday, September 25th. This will also be after market close. This is an interesting trend here. I like this tight little channel that the stock is in going into the earnings announcement, because then you could get a big potential move, and you can see that, you could get some real volatility. Look at this. Stock closed at 45.68, and then they had earnings, and the next day the stock is at 65.04. Okay, so from 45 to 65, that's obviously a $20 move just through earnings. And talk about a good opportunity for a straddle or strangle. And that's what you could expect here from Concentrix if you get the pricing right. If you can get that pricing in at around 10% for a 10% move, which we can sometimes do, then that would be a good opportunity for profit with a straddle or strangle. All right. So that's our list this week. Let's just take one more look at the list in its entirety. Again, we have we send this list out to our subscribers. All right. It's free. There's no cost for it, but we do send it to our subscribers each and every week. It comes out Sunday night, and to prepare everybody for the upcoming trading week. And it is definitely worth its weight in gold. Okay. Because a lot of people talk about earnings. They talk about what they might think are going to happen at earnings, but nobody talks about how to profit from these stocks through the earnings announcements and what the best strategies to do so are. All right. We do that right here. All right. On earnings call. All right. So let's get to our trade last week. That takes us up through our trade. And, because we do show a lot of these stocks, be sure to look at the chapter feature at the bottom. We do talk about a lot of stocks. So if you want to jump to a particular one, you can find it there. So last week we gave out a trade on Dave & Buster's. Now this was a strangle. Okay, a strangle is where you buy a call at one strike price and you buy the put at a different strike price. All right, it keeps your debit a little smaller. This trade was about $200 and some odd. Okay, for the strangle. So even a smaller account could trade it. So let's see how we did in the trade. We held the trade through the earnings announcement, and we actually held it for a couple of days later, and we closed this out on Friday. All right, for a nice little profit of $164. Okay, that was up 31%. Well, actually 31.9%, just under 32% return in just 4 days. That's a return on risk in just 4 days, a 32% return on risk in just 4 days. All right. Now, $164 doesn't seem like much, but keep in mind, this trade is based upon a hypothetical $10,000 account. So that's a 1.64% return on portfolio in just 4 days. Okay. That's a pretty healthy return, especially if you get in a rhythm and you can do these one after another and after another. And, you can definitely generate a very healthy return on portfolio over time. So what do I have for you this week? Well, again, we're going to stick with the breakout stocks. All right. And we are going to look at Worthington Industries. All right. Now, this is a straddle. You can see the point there in the risk graph. The risk graph is on the right. The red, the blue, the green lines, but I'm looking at the black line. That's where you want to focus, because anytime there's a change in direction of that black line, that's a strike price. And notice it's a point. Okay, instead of a flat end, it's a point, and that means it is a straddle. That means a call and a put were bought at the same strike price at this in this example that was at $60. So this is a $60 strike straddle. It's not that it costs $60. It's that it is the strike prices that we are buying. Okay, the 60 strike call, the 60 strike put, and the debit looks to be about $590. Okay, that's about, so even a small account, that's at the upper end of where I would say the average $10,000 account could trade. We definitely would want to kind of watch this carefully. The good news here is that this does not have weekly options. So we had to go with regular cycle options that expire on the third week of every month, the third Friday, okay, of every month. So you can see if here on the right-hand side, in the days to expiration, in the red line there, it says 25 days to expiration. So we literally have over 3 weeks for this stock to move if we needed to, but we hope that it just moves enough for us to make a profit right after the earnings announcement. Quick in, a quick out. Otherwise, we'll look to manage the trade. If it doesn't, we'll just kind of check the volatility of the stock and watch that as we go through the next couple of weeks. But we could be out of it this week, or we could be out of it in a couple of weeks from now. It's just one that we will keep an eye on and we will watch carefully. All right. So that's our show for this week. Listen, we have a free gift for you if you want to download a sheet that shows you how we trade these volatile stocks. Okay, I show you exactly how we do it through this download. It's free for everybody at ewotrader.com/straddle. And you can go there and download a copy, and you can see how we do trade these breakout stocks, because we do it each and every week right here on Earnings Call. So everyone have a great trading week, and we will see you next Monday. Take care.